Coinsurance. Coinsurance is the amount, generally expressed as a fixed percentage, an insured must pay against a claim after the deductible is satisfied. In health insurance, a coinsurance provision is similar to a copayment provision, except copays require the insured to pay a set dollar amount at the time of the service. Some property insurance policies contain coinsurance provision. How coinsurance works. One of the most common coinsurance breaks down in the 80 per 20 split. Under the term of an 80 per 20 coinsurance plan, the insured is responsible for 20% of medical costs, while the insurer pays the remaining 80%. However, this term only applies after the insured has reached the term out-of-pocket deductible amount. Also, most health insurance policies include an out-of-pocket maximum that limits the total amount that the insured pays for care in a given period. Example of coinsurance. Assume you take out a health insurance policy with a 80 per 20 coinsurance provision, a $1,000 out-of-pocket deductible, and a $5,000 out-of-pocket maximum. Unfortunately, you require outpatient surgery early in the year that costs $5,500. Because you have not yet met your deductible, you must pay the first $1,000 of the bill. After meeting your $1,000 deductible, you are then only responsible for 20% of the remaining $4,500 or $900. Your insurance company will cover 80% of the remaining balance. Coinsurance also applies to the level of property insurance that an owner must buy and structure for the coverage of claim. If you require another expensive procedure later in the year, your coinsurance provision takes effect immediately because you have previously met your annual deductible. Also, because you have already paid a total of $1,900 out of pocket during the policy term, the maximum amount you will be required to pay for services for the rest of the year is $3,100. After you reach the $5,000 out of pocket maximum, your insurance company is responsible for paying up to the maximum policy limit or the maximum benefit allowable under a given policy. Copay versus coinsurance. Both copay and coinsurance provision are ways for insurance companies to spread risk among the people they insure. However, both have advantages and disadvantages for consumers. Because coinsurance policies require deductibles before the insurer bears any cost, policyholders absorb more costs upfront. On the other side, it is also more likely that the out-of-pocket maximum will be reached earlier in the year, resulting in the insurance company incurring all costs for the remainder of the policy term. Copay plans spread the cost of care over a full year and make predicting your medical expenses easier. A copay plan charges the insured a set amount at the time of each service. Copays vary depending on the type of service that you receive. For example, a visit to a primary care physician may have a $20 copay, whereas an emergency room visit may have a $100 copay. Other services such as preventative care and screenings may carry full payment without a copayment. A copay policy will likely result in insured paying for each medical visit. Property insurance coinsurance. The coinsurance clause in a property insurance policy requires that the home is insured for a percentage of its total cash or replacement value. Usually, this percentage is 80%, but different providers may require varying percentage of coverage. If a structure is not insured to this level and the owner should file a claim for a covered period, the provider may impose a coinsurance penalty on the owner. For example, if a property has a value of $200,000 and the insurance provider requests a 80% coinsurance, the owner must have $160,000 of property insurance coverage. Owners may include a waiver of coinsurance clause in policies. A waiver of coinsurance clause relinquishes the homeowner's requirement to pay coinsurance. Generally, insurance companies tend to waive coinsurance only if the event of fairly small claim. In some cases, however, policies may include a waiver of coinsurance in the event of a total loss. Thank you.